This is your LMAX exchange technical update for Monday, August 29th, 2016. Euro dollar. So the euro is showing signs of topping out yet again, with the market stalling out ahead of 114.28, that key internal range resistance going back to the 24th of June, and now trading back below the 100-day moving average. The break and close back below the 100-day moving average on Friday sets the stage for the next major downside extension towards next key critical support down around 109. At this point, again, only back above 14.28 will negate the bearish outlook for this market, while in the interim it looks like a lower top could now be carved out by that high that we saw in the previous week, which comes in at 13.67. Sterling dollar. So cable saw a bit of a correction in recent days, though ultimately, while the market holds below 133.72, the broader downtrend remains firmly intact in favor of what should be the next downside extension below the recent plus 30-year low from July, down towards 125. Dollar yen. So dollar yen has seen a bit of a bounce in Friday trade, but ultimately, while the market holds below 102.65, there is risk for another topside failure ahead of a resumption of what is the broader underlying downtrend towards a retest of the 2016 and multi-month low from June at 98.99 and towards 95 further down. Only a daily close back above 102.65 would negate that outlook. Euro Swiss. So Euro Swiss is trading back towards the top of a multi-day range, but ultimately the market will need to establish above 110 or back below 108 for clear directional insight. We did take out some key resistance that was in play from the 12th of July up around 109.45, but again, really you need to establish back above 110 to suggest this market is looking to really break out. Aussie dollar. So Aussie looks to be carving a fresh lower top at 77.58 below the 78.35 2016 high, and this latest round of setbacks could accelerate towards next key support, which comes in the 74 area. At this point, only back above 77.58 would compromise this outlook. Dollar CAD. So dollar CAD appears to be in the process of carving a meaningful base on a longer term basis, with the market now looking for a higher low at 127.64 above the previous higher low at 26.55, ahead of the next upside extension back above those critical highs that we saw back on the 27th of July, which come in around 132.55. At this point, only back below 27.64 would compromise this outlook, while really only below 26.55 would negate. Kiwi dollar. So Kiwi recently put in a fresh 2016 high on Friday at 73.81, but the market has consistently shown topping out and an inability to hold above 73, and we saw another topside failure on Friday following that 2016 high, setting up an intense bearish outside day formation. At this point, it does set up the possibility for additional acceleration of declines back down towards the 69.50 area, which is next key meaningful medium-term support, but initially we'd need to see a break and close below 72 to get things going. SPX 500. The S&P 500 has recently traded up to a record high and is showing some signs of exhaustion and the potential for a rolling over, but we would need to see a break below critical support at 21.47 to strengthen that outlook and accelerate declines. Until then, the market continues to consolidate and could be exposed to fresh record highs through 2200. Gold. So despite this latest round of setbacks in gold towards 1300, the market should be very well supported into that figure ahead of the next major upside extension back above 1375, the 2016 high, and towards a measured move in the 1450 area further up. If you look at this chart going back the past several months, it is more constructive, and again, we are starting to trade in an uptrend here with the market looking for higher lows ahead of next bullish upside extension. So only back below 1300 would really compromise the immediate bullish outlook for gold.